Hello, everyone. My name is Carlos Figueredo, and I am the CEO of Open Vector. Open Vector, for those who don't know who we are a consultancy firm specializing in open banking and open finance. I have over 30 years of experience in the financial sector, but more importantly, I was the head of data standards for the open banking implementation entity in the UK. I also participated as Open Vector in assisting the Mexican government in the creation of open finance and the implementation of open finance, establishing the first data standards and some of the regulatory features and architectural features that are in place today. So very proud of the work that we have done, and we continue to do so around the globe, specializing ourselves in open banking and open finance. But today I'm here to talk to you about a very important subject, which is where open banking is today. In fact, is open banking isn't going anywhere, but why is it moving so slow? And I think that that is what brings us to today's conversation and a reason why I am speaking to you today. So in light of that, I'd like to go ahead and present to you what this topic is about, why open banking is moving so slow, and where we are today. So I'm going to go ahead and share with you my screen that will have my slides and first thoughts. So once again, open banking isn't going anywhere, but why is it moving so slow? I'd like to thank Open Banking Week for allowing me to be here and speak to you, and hope that you really enjoy the information that we are going to talk about going forward. So the two topics, very simply, open banking is not going anywhere, and why is it moving so slow? So let's start with the first one. As you all know, open banking and open finance is a global reality. So it's really not going anywhere. It was established in the UK in 2016, of which I was part of that pioneering team as the head of data standards for the OBIE, as I mentioned earlier. And we never really thought that it was going to take off the way it did, and has been implemented and continues to be implemented worldwide in such an exciting, strategic movement that has taken on worldwide. Why this is so important? Because simply of all of the opportunities that it opens. When we think of open banking, we have to think about everything that it can bring, not only for in the sense of financial and social inclusion, but also the difference that it can make to people that are banked, but also non-banked. So again, we never really thought that open banking was going to take off the way it has, and here we are. It is a global reality, and this is one of the first myths that I'd like to break, that open banking isn't going anywhere. There were a lot of people at the very beginning that were saying that this was just some kind of a fashion or something that was just going to disappear, that nobody was going to undertake. Well, just only 3 years from the time that it started, look how far we've gotten, and it's only the beginning. As everybody knows, the beginning of open banking, we talk about now about open finance, we're talking about open data or open sector. So it's an incredible, incredible opportunity for all of us in the creation of these new products and services, putting the consumer at the center of it all. So having said that, I think it's really important that we define what is open banking. So what is it? It's to encourage the sharing of data between the entities authorized to consume that data, first of all. It increases collaboration between financial institutions and fintechs. So very important here is this aspect of collaboration, the ability for financial institutions to work with fintechs of any size to be able to create these products and services. It ensures that all efforts made by participants have a common goal. And as I mentioned right at the very beginning, we're all here it's all about the consumer. It's consumer is at the center of everything. So what is open banking not? Open banking is not another regulatory compliance project. It's a movement, it's an initiative, a global initiative. It's not an initiative to favor the banks. If anyone thinks that open banking was created to save the banks, they are completely wrong. An initiative that is going to disappear, well, I think we've already proved that this is not true, as you saw from the slide before. If anything, open banking is becoming a much bigger movement. And it's a movement that only covers the financial sector. Well, definitely not. We're moving it from open banking into open finance. And it's definitely the future where we're seeing the ability of cross-sector products and services. So this is definitely not something that's just going to stop in the open banking side of things. So again, open banking is now viewed as the most revolutionary initiative in the financial sector. So why is this not going anywhere? Why is it that open banking is not going anywhere? Simply because we're looking at a potential value of open banking of 9.4 billion by 2022. So that means that we see a huge benefit in the opportunity of open banking in just a couple of years' time. As a matter of fact, in just a year's time. So the value that we're seeing in what open banking can bring is enormous. And we're going to see in a couple of slides of where that value can come from. Today's consumer is much more aware of the power of its data and of its specific needs. And this is again, and I will continue to talk about, this is a consumer centric initiative. So today's consumer is much more aware of the power of its data, the ability to make decisions on its own, and to find those solutions, that customizable aspects of it that a consumer wants, to be able to get information, to get it now, and to get it in the format and through the channels that they would like to receive it in, not the way that banks or financial institutions as a whole want to present it in their traditional structures. This is all about the consumer. And the way that we can demonstrate that is that 47% of consumers want mobile access to financial products. So that means that they are diversifying in the way they access this information. It's not about bricks and mortars anymore. It's not about clients going or consumers going to a branch. This is about them accessing this information in any way that they see possible. And finally, big techs are well aware of their business potential with the arrival of open banking. So big techs have become definitely, and not only big techs, fintechs themselves have become a huge rival, and they understand the power of data, and they will become and are still and are becoming a huge opportunity, threat, depends how you see it, in this whole movement of open. And I think this is another reason why open banking is not going anywhere, because it's definitely the movement that the big techs, the fintechs have been waiting for, to be able to create products and services, to finally have access to data that they can now create products and services to benefit, once again, that consumer. So again, on the right, we have another bit of information there. With 66% of consumers want faster, customized services, custom services. Again, this isn't about a one size fits all traditional structure. This is about consumers wanting to find information that is custom to them, to their needs, and to how they want to receive that information. Very, very important as to we look at that aspect. So now let's go on the flip side a little bit as to the second part of what we're talking about. So why is it moving so slow? There's three key reasons why this is moving so slow. The first one is there's a lack of true baseline understanding of what open banking really is. As Open Vector, we have seen this over and over. Not only when we work with regulators, but we work with financial institutions, we see that over and over, they do not understand truly what open banking is. Or maybe a department understands it, their innovation, somebody within the innovation team or their innovation team as a whole. But when you talk to their C-levels, all the way down to anyone within the institution, there's a different understanding of what open banking is. And that is a huge problem. So this is why it's moving slow. It's one of the key aspects of why it's moving slow, because that lack of understanding is the one that's holding back financial institutions from moving forward. If you have a C-level that has the pressure of investors, has pressure of coming up with revenue year after year, they see open banking as, first of all, not as a short-term gain or as a short-term opportunity. They see it as a medium to long-term, if they see it as an opportunity at all. At some levels of executive levels, they actually don't see this as an opportunity, or very few institutions see it as an opportunity. Instead, they struggle with the cultural changes that's required to be able to move forward. And I think that is what also is preventing is that disparate understanding of what open banking is. And that moves me on to the second, which is a lack of understanding by the banks of the commercial opportunity of open banking. We have to remember as financial institutions that we don't only have to provide data, we can also consume data in the same manner. And that's a very important aspect, that financial institutions can also be a very, very active participant in the movement. By consuming the information or behaving like a tech, they can consume the information and only create, enrich, or have new products and services they otherwise would not have had before. And if it's not there for new consumers, even for their own current consumers, they can certainly create a much better consumer experience through that ability of being able to use that data. So again, it's that lack of understanding and visualizing the commercial opportunity. And lastly, it's the inability to break traditional banking structures. Truly, and what I mean by that is realistically. Uh, and what I mean by this is that to be able to participate in open banking, financial institutions have to think and act like a fintech, like a big tech. They have to be able to move fast. They have to be able to be much more agile. They have to be able to quickly adopt and adapt to consumer needs and to the market and to competition. And this is not what traditionally banks do. And that aspect of breaking these traditional ways of financial institutions is the third reason why I believe it is moving so slow. Similar to all, or taking into account all these three pillars, another aspect of this is that when we talk about, and I won't be touching about this in this specific presentation, but I have spoken about this before, is that when we look at regulation, we talk about whether we need a fully regulated market or a completely open, non-regulated market. And I truly believe that we need a regulated market because unfortunately, financial institutions will do the bare minimum to comply unless they are pushed to move forward. And it is simply because of that lack of understanding of the opportunity and the fear of these traditional structures that have to be broken down in order to be able to really participate and move faster. So again, it's a real, I'm not going to call it a shame because I think that many institutions are starting to turn and realize it. But for the time being, we're seeing that slow chugging aspect of open banking simply because of these three aspects, in my point of view. And I'm happy to discuss this with any of you as to a good example of what has happened in the UK or even some of the aspects of Mexico, where even though we have regulation and standards and all these kinds of things that are allowing for an amazing aspect of being able to take full opportunity of this data and create products and services, we still see how financial institutions are not really embracing or creating the products and services that we would expect, considering the amount of budget, technology, other aspects. There are always many excuses that come up as to why they seem to not be able to move quickly. So having said that, let's look at this a little bit closer. So when we look at open banking versus traditional banking, what exactly do we mean, and what is it that I believe happens? If we look at the graph below, we have the GAFAs, which is the Google, Apple, Facebooks, and Amazon as an example. So here what I'm looking at are just big techs, fintechs. How do they treat the end goal of reaching a consumer? So let's look at the two tracks as if it was a race between two competitors. On the top side, you see a GAFA or a fintech, a big tech. They look at innovation as an opportunity. So they take this data, they look at the opportunity and create products and services based on that, with potentially a final aspect of monetization, but use that data at the very, very end to access those consumers via a range of different channels and different ways, customizable ways, et cetera, to reach that consumer. If you look at the traditional bank, which is labeled at the bottom with the red arrows, they see innovation, but immediately they skip to a more of a responsibility aspect where they don't see it necessarily as an opportunity, but more as to guarding the aspect of the data and of the consumer itself. They do create products and services, but those products and services are more one size fits all. They don't really see it as trying to use that data to create that value or that customizable aspect. It's more about that responsibility of creating a 1, 2, 3, 4 tiered product of which consumers then have to come into the market to go get as a one size fits all. And finally, you have the consumer at the end that has to take a look at these products and services that the bank is creating. And it's though it can be through different channels, it's not with the same target. So two different aspects of how banks versus fintechs approach the subject of reaching to a client or the aspect of the end goal of the product and the service. They both have data available to them. Banks have had the data for many, many, many years. They both create products and services. There is an element of monetization, but the end goal is different from a trying to reach a client via diverse different channels and using that data to enrich the customer experience, products and services, customization, flexibility, to more of a traditional structure where it's more about creating products and services for a one size fits all model, not taking into really into the account of what the needs are of the consumer. So I think that this has been some of the hindrance around the difference between traditional banking and what the opportunity of open banking is. Now, it doesn't mean that a bank cannot take that aspect of being more of a fintech thinking, big tech thinking. It's certainly available, and they certainly have the capability. And I truly hope that they continue to embrace that. We are working with clients that are completely on that boat, that understand the opportunity and are changing their structures to act more like a big tech. And certainly, we're there to help. In that drive. So if we take a look at in the middle piece there, what I said was that fintechs utilize client data to create and offer new products and services. They use technology to improve the efficiency in the financial services by making them more accessible, faster, while reducing their cost. And this is, again, a very important point, is to trying to not only use the technology for that faster service, but also to look at it from a cost perspective. So when we look at how should a bank then move into that more breaking those traditional molds, I have to look at this graph, which is about this all starts with internal decisions. The changes come from within. And how do we do that? It's basically looking at, you have the client in that circle that's labeled in between the structural changes that have to come from the outside, but also from within the inside. And some of those important pieces are education. Make sure that your institution has some kind of an educational level that is even par across the entire company or the entire institution. Make sure that everyone understands what open banking is, and takes the necessary steps to ensure that everyone does. Create the support structures necessary to be able to provide those services within. Have a strategy that is clear, that understands what the opportunity of open banking is. And like I said earlier, is that cultural change that starts from the top. This doesn't start from an innovation or a commercial department. It needs to start from the top. So again, you have that client that sits in the middle, that is now the one being the one that will be affected by these changes positively. So then you can start to create those more internal changes, which are changes in your architecture to create products and services that are more related to that customer centric ability. It's that collaboration with fintechs of all sizes to be able to create those products and services. Something I want to highlight is that the time of being a I build it all kind of a solution, those days are over. This is really about collaboration and finding where you can leverage the strength of fintechs of any size to be able to help you create these products and services. And lastly, it's just that ability of commercializing the opportunity in just the right way to make sure that you are reaching out to your clients, but also the opportunity for yourselves in what that would mean for the bank to make money, obviously, off of the opportunity, should that be, again, the big driver within your structures. So use international methodologies and structures. We don't need to reinvent the wheel. We already have core structures that have been created either in the UK-based open banking, or we can look at what was done in Mexico. That is basically a bit of a copy of the UK structure, which I completely supported. We were there helping them build it, as I said. Brazil, the same thing, using core international structures and architecture, using ISO-based data standards, or using architectural security and strategic other methods like that. So again, having those structures in place, no need to reinvent the wheel. Have a vision for the future, realizing where you can go with open banking. Implement a roadmap of strategic deliverables. I mentioned that earlier, and form and implement an open banking office. Should that be something that you're able to do, have at least a tiger team or a strategic team that looks at open banking from top down. And lastly, identify distribution channels relevant to the customer. So really important to be able to reach out to your customer and how you can continue to be centric to that consumer. So where do we go from here? Having said all of that, what do we think? So the three key parts that I want you to take away here is understand through education, embrace the opportunity, and finally, understand that those cultural changes are important for you to exist. And I'm talking to financial institutions, obviously. On the left, I highlighted some of the things that are out in the news and out on the press that are incredibly relevant, and are some of the comments as to why, or how do we see open banking, or the threat that financial institutions believe that open banking is. We have Jamie Dimon of JP Morgan Chase that came out. It was a really important header in one of the newspapers, I think it was CNBC, that said that JP Morgan should absolutely be scared about the fintech threat. He said this to his board. And again, he gave a list of all of the big techs and fintechs that they should be aware of. And I think that that was a really important point where finally some of these bigger institutions realize the threat. But I really don't want to see it as a threat. I continue to think that if they see it as a threat, it's because they're not realizing the cultural changes required. If they realize that, they would see it as an opportunity. A financial institution that has the ability and takes on those cultural changes, breaks traditional barriers of acting like a traditional bank, and acts more in a much more agile way, will definitely see open banking as an opportunity. Facebook relaunches WhatsApp money transfers in Brazil. Facebook failed at the beginning to launch. It was pushed back. Financial institutions went to the central bank, screamed bloody, that it was unfair, et cetera, whatever it is that happened. And finally, WhatsApp prevailed. It is going to go ahead. And it only tells you that, again, the power of the consumer needs, the power of the big techs, the power of the products and services is not going to stop. We're not going to be able to stop. And like I said here on the right, big techs and fintechs are coming whether you like it or not. They're there to stay simply because we ourselves are consumer. And what we want are products and services. We want them to be fast. We want them to be chic. We want them to deliver what we need. And how do we do that? It's mainly the big techs, fintechs that are providing us those very unique products and services. And nothing stops financial institutions from collaborating to be able to create those products and services. At the very bottom, we see the Huawei ban explained, a complete timeline and everything you need to know. Again, Huawei was banned from the US. Why? It was banned because, again, it was posing a threat to the financial institutions of the US and to the US market as a whole. And that's not something that the US market accepted. Now, we can put a lot of politics around it and we can say whatever it is, but it's just like the WhatsApp element in Brazil. It is just seen as a threat. And financial institutions will place their muscle and their power to stop these kinds of aspects. It's only a question of time before this all comes back to play, whether it's Huawei or the example of WhatsApp. We simply won't stop fintechs from coming simply because we as consumers will continue to want that. So the lessons learned here is, like I said, big techs and fintechs are coming whether you like it or not. Embrace open banking as an opportunity or become a background processor. So it is very, very clear that for financial institutions, if they don't see this as an opportunity, Bill Gates said this years and years ago. He says, we don't need banks, we need banking. Now, I have nothing against financial institutions. I started my career in a bank. I continue to help financial institutions to come forward in this opportunity to commercialize, to see the vision, to change their aspects. But again, if they don't realize the opportunity, and for those financial institutions that think that they can wait a year or two, unfortunately, we may not see them as we see them today, simply because the demands, the way the market is moving so fast, it's just a question of time. It is the era of the consumer. This is completely customer centric. Financial institutions that believe that open banking was created for them, or on the other flip side, that see this as a complete threat, they're just wasting their time. This is the era of the consumer. The consumer is the one in control. The consumer is the one making the decisions, and the one of which this entire initiative was built around and of which we're focusing on. And lastly, collaborate and then collaborate again. And what I mean by this is that collaboration is the biggest key to all of this, because we can't do it all. No financial institution, no fintech can do it all. We need each other. And I think it's just an amazing opportunity. What open banking, open finance is allowing us to do is to collaborate in ways that we have never would have done before. We've never done this. And I think it's just a great opportunity for us to really come together and leverage our strengths to be able to create and benefit from these things. I think a clear example of this lack of collaboration is that even though we have all of these incubators and all this investment that's been done between financial institutions and giving prizes to fintechs and, again, these incubator models, it's very difficult to show or to state how really the collaboration between financial institutions and fintechs when there aren't many products and services to show for it. And that only tells me that basically financial institutions are pushing back against that collaboration, because with all of the incubation, all these incubator investments that have been done in fintechs, there should be overwhelming amounts of products and services that should be already available. And the only reason why they're not, I believe, is because there's just a concern about that collaboration and that ability to put these products and services out the way they could. But again, it's something that we will see. I think there's a lot of financial institutions that are working on changing that. They are leveraging the collaboration, and those are the ones that are going to come to the top and be successful and continue to drive and be at the forefront to the consumer. So again, with that said, I just like to say thank you very much again to Open Banking Week for having me, for allowing me to speak here, and again, an absolute pleasure to be doing this. And thank you very much. Have a great, great day.